probably heard the phrase, drill baby drill, echoed in campaign rallies, political debates, and even TV news. It's catchy, it's confident, and for some, it sounds like the solution to everything from high gas prices to national security. But in 2025, this phrase is more than just a slogan. It's the center of a very real and very heated policy push to put fossil fuels back at the heart of the American economy. The new administration declared an energy emergency. Public lands were opened up, offshore drilling restrictions were rolled back, and permitting was sped up across the board. On paper, it looks like a golden era for American oil. But here's the twist. The numbers tell a very different story. U.S. oil production hit 13.49 million barrels per day in May 2025, breaking records. But that's only a slight increase from April. In fact, projections for the rest of the year show production leveling off, and by 2026, it might even decline slightly. So while the headlines scream boom, the trend lines whisper stall. Now, why is that? The truth is, drilling isn't just about permission, it's about profit. Oil companies aren't charities. They drill when it makes financial sense. But with oil prices floating around $65 per barrel, many shale operations are barely breaking even. If prices drop to $60 or below, the majority of drillers simply cut back. At $50, drilling nearly stops altogether. This isn't just speculation. The number of active rigs in the U.S. has dropped sharply in the past year. Fewer rigs mean fewer wells. Fewer wells mean less oil. That's not expansion, it's quiet contraction. And even for companies that want to drill, costs are rising. Tariffs on steel and equipment are hitting the bottom line hard. Some producers have started using the word unsustainable when describing the current policy mix. Others say they're focusing more on buying back stock or paying dividends than expanding production. Meanwhile, the environmental cost is ramping up. Over 140 rules and safeguards have been rolled back or weakened. Millions of acres, including parts of the Arctic and Gulf of Mexico, are suddenly open to extraction. The goal? Pump as much as possible, as fast as possible. Supporters say this makes America energy dominant. Critics call it reckless. And the climate math isn't forgiving. Fossil fuel projects built today will still be operating in the 2050s. That means decades of locked-in emissions. Every new well dug now could be a liability tomorrow. And it's not just the climate. Think about economics. Think about stranded assets. If global demand for oil peaks, something many experts predict will happen within the next 5 to 10 years, then the infrastructure being built today could lose value quickly. Investors are watching. Banks are watching. Even major oil companies are hedging their bets. Some are pouring billions into wind, solar, and hydrogen, even as they keep drilling short-term. Here's where the contradiction becomes crystal clear. Permits are being issued like candy, but actual drilling isn't exploding. It's cautious, it's calculated, because oil executives know that slogans don't pay for failed wells. There's another side to this, consumer prices. The public was promised cheaper gas, but that hasn't really happened. Gas prices are still influenced by global markets. Even if the U.S. drills more, it doesn't guarantee domestic discounts. Oil goes to the highest bidder. That's how the market works. And then there's the workforce. The oil and gas sector has never fully recovered employment levels from before the pandemic. Automation is replacing human workers. Communities that once depended on these jobs are seeing fewer benefits and more environmental risks. Even in oil-rich states, public opinion is shifting. Young voters want renewables. They want jobs in clean tech, not just more pipelines. They're looking at climate disasters, wildfires, floods, heat waves, and asking if doubling down on oil is really the answer. What's happening is this. The drill, baby drill mindset is colliding with the economics of 2025, and the collision is loud. We now see oil inventories rising globally. That suggests we may be heading into oversupply again. And if that happens, prices will fall. When prices fall, drilling slows. It's a cycle, and it's repeating. Even oil executives are saying it out loud. They're worried about overpromising. They want stable prices, not boom and bust. They're telling lawmakers that the smartest move isn't just to drill, it's to invest in a long-term, diversified energy strategy. But politics doesn't always wait for markets. And that's the real danger. If policymakers push too hard, too fast, we could be building an oil empire just as the world turns away from oil. That's not dominance. That's a trap. There are environmental costs, too. New extraction zones increase the risk of spills. Methane leaks are notoriously hard to control. Coastal ecosystems are vulnerable. Drinking water sources are at risk. And most of the burden falls on communities that have the least power to resist. So where does that leave us? Right now, the US is at a crossroads. Drill more and risk future irrelevance, or invest smarter, cleaner, and more strategically. This isn't about flipping a switch. Fossil fuels aren't going away overnight, but neither is the global energy transition. Other countries are racing ahead. China is dominating solar. Europe is leading in offshore wind. Even oil giants like Saudi Arabia are investing in green hydrogen and carbon capture. The game has changed, and slogans like "Drill, baby, drill" are starting to sound like echoes from the past. But there's still time to shift course, to recognize that energy security doesn't mean just more barrels. It means reliable power, affordable energy, and long-term stability. So the next time someone says, "Drill, baby, drill," ask them what comes after the drilling. Ask them where the world is headed, and ask whether America is planning for it, or just pretending the future isn't already here. Because energy isn't just fuel. It's the foundation of our economy, our environment, and our way of life. And how we choose to power that life today will shape the world our children inherit tomorrow. What do you think? Let us know in the comments.